So I'm Frayne Olson. I'm the crop economist and marketing specialist with NDSU Extension. Here's my contact information. If there is something you think about later or have a question that we can't get to today, please feel free to contact me. I'll do my best to respond. So we're going to look at corn specifically today. I do usually start with the USDA information. This is the most recent information we got from the USDA as of last week. On the right-hand side in blue is the most is for the current marketing year. Those are the numbers I'll be focusing on. In the middle is the green column. That's the information from last year's marketing year. And then, of course, the stuff in the black on the left-hand side is from 2 years ago. So just to recap a little bit, I usually like to start with the USDA numbers just because if you are listening to the radio or reading articles, usually a market analyst or some kind of forecaster will start talking about, well, this is what the USDA is saying, and here's why I think that number is wrong. So if you don't understand where USDA is coming from or the numbers that were out there, it's pretty hard to understand whether you agree with this person's analysis or not. So just a couple of things that we got from the update last week. For corn specifically, it wasn't a real big shock, but it was something that I think people raised their eyebrows on. We got the final production numbers, so that would be harvested acreage as well as national average yield. We did see a slight reduction in the harvested area with a slight increase in the average yield. And now my analysis, my assessment, I think a lot of others, is that there was a lot of corn, in particular in the Western Corn Belt, North Dakota, South Dakota, Nebraska, that got cut for silage, for corn silage, and instead of being harvested for corn grain. So all the numbers on these tables are for bushels that have been harvested and run through a combine. So it does not include corn silage. And again, we're just trying to count bushels here that go into the supply chain as whole corn. So as a result, we did, again, my assessment, we got some of those low yielding acres got chopped for silage, which brought the national average yield up. As we wash it all through the process here, our total production did decrease a little bit. USDA did make some small adjustments on the usage side, the consumption side, which we'll talk about just in a minute. So if we look at how did the numbers come out, relative to what the trade was expecting. So our carryover stocks, the amount of grain that we expect to have in inventory just before harvest of next year, actually went down a little bit. The trade was expecting a slight increase. We actually got a slight decrease again. So that would put some, what I would call some supportive tone into the corn market. It wasn't necessarily a big rally per se, but at least provided some additional support for pricing as we move forward. So let's dive into the consumption part, because right now we've got basically erased some of the uncertainty regarding production. We're now really, for old crop corn in particular, how quickly are we burning through these inventories? So these are the major categories, the major kind of buckets that we use for tracking corn utilization. The blue line on top is for feed and residual. The red line is ethanol. The black line is exports, and the green line is kind of everything else. So the dotted lines on the far right-hand side represent the current USDA forecast. So I want to look at the current USDA forecast for the 12 months of consumption, okay, this is the full marketing year, relative to history. So let's look at feed for first of all. The USDA did reduce the number of bushels of corn going into the feed pile. Now, again, I think part of that is tied back to the slight increase that we would likely see in corn silage. So there's kind of a trade-off there. That does actually make some sense. We also got a quarterly stocks report that verified that we're not using up corn quite as quickly as we'd expected, and that's really associated with the feed industry or the feed sector. Again, our cattle numbers are down a bit from the previous year. Our hog numbers are down a little bit from the previous year. So we would likely see a smaller feed number for this current marketing year. On the ethanol side, for the red line, we do have the ability to track ethanol on a weekly basis. I'll show you a chart in just a moment that allows us to kind of back calculate on how much corn we're using in the ethanol sector. The problem right now we've got is really the black line, and this is a bit concerning. USDA once again also reduced the amount of corn exports, at least their forecast for total export volume throughout the 12-month marketing year. And if you look at where we are right now, what the current USDA forecast is relative to history. So if we follow this back across, about 2 billion bushels This is kind of on the middle to lower end of the range that we've seen over the last probably 10 years. And there's a reason for that, which I'll go through in just a moment. So that's one of the things we're tracking very, very closely. Coming to the ethanol, just to give you some historical information, and USDA tracks this as well as many others. This is the amount of ethanol, corn ethanol produced in barrels per day. So it's a weekly number. It's always a little bit behind. This is the most recent information. We have seen some volatility in the amount of ethanol produced. Ethanol production margins right now are okay, but not fantastic. The other thing that we're starting to see, of course, is with gasoline prices starting to reduce now, or to mitigate a little bit, that will hopefully allow us more incentive to drive. As the more miles we drive, the more ethanol we consume. So this is, I really do feel that USDA has a pretty good handle on what the ethanol production numbers will be, and therefore their forecasts. The more challenging number to try and get, of course, is the exports. Now I'm going to explain this very quickly, just to show, how have exports by country, because we need to kind of follow not only the total numbers, but also which countries are buying U.S. corn. So the columns on the far left-hand side, these four columns on the far left, with the totals on the bottom represent the full 12-month marketing year. And you can see, going over time, our total export volumes have bounced around. Our record export volume was back here in 2020. This is where we were as of last year, the last year marketing year's total. So this happened from the end of August, basically September 1 through the end of August. These two columns on the far right-hand side represent the marketing year to date. So I look back, how did we compare marketing year to date this year in the total volumes versus this time last year? So we're going from September 1 till about the middle of January. And if we look down here at the totals, we see that our corn exports this year relative to where we were this time last year are down pretty significantly. Not quite 50%, but we're getting very close. When we look at the countries that are behind, almost all of the countries are behind their pace last year. Mexico is our #1 buyer. They aren't much different from this time last year. I do expect the exports into Mexico to be very steady as we go through the rest of the marketing year. I don't expect any major problems there, but there is one political issue that I'll talk about in a few minutes that might cause some heartburn. One of the big differences, of course, has been China. Last year and the year before, they were very aggressive in their buying of U.S. corn. This year, they've been much slower in buying U.S. corn. The anticipation, or I guess the expectation, is that China will start buying a bit more of their corn supplies from Brazil. The Brazilian corn harvest is still a ways off, so we might see that number increase over the next couple of months. But just please recognize we're way behind on the volumes. And even a country like Japan, which tends to be a very stable buyer of U.S. corn, is behind last year's numbers. So it's not just the China, although China accounts for a large portion of the decrease. A lot of our other corn trading partners are also well behind their normal pace at this time of year. So let's look at, what does this mean for pricing? I want you to focus on the blue bars on bottom. This is the stocks to use ratio. So we're looking at the ending stocks. How much grain do we have left over just before harvest, divided by our total needs. And using a percentage, we can look across time. And there's a pretty strong relationship between these ending stock values as a percent and the prices we see in the marketplace. So what tends to happen is as our inventories get very small, as the market gets really concerned about having enough corn left over, or how quickly we're using up our inventories, two things tend to happen. Number one, we tend to have higher average prices. So average prices in the marketplace go up, and we tend to have a lot more price volatility, because any new piece of news that enters the marketplace causes a lot more shock value. If we have big inventories, new piece of news doesn't have the shock value as if we had lower inventories or really concerned about our inventory levels. So the red bar is the current USDA forecast. So let's compare the red bar to what we would typically see at this time of year. Notice 1996 was our record low in corn inventories. Again, this inventory level can change over time depending upon how things play out here. but the current kind of estimate is to be towards the lower end of our long-term average. Recognizing the last couple of years, we've had higher inventories, which again tends to mean lower prices and more stable prices. So I just want to compare what we see here in this 2011, 2012, 2013 time frame versus what we've seen in the last couple of years. And let's compare that relative to when we had higher inventory levels. So if you look long term, these are what's called a continuation chart. It's information futures prices going back into 1990. Now, one comment is that this is not adjusted for inflation. So if you notice back here, 1996, that spike we had, if we increased those prices into today's dollars, it would be much higher. But I just wanted to kind of show you the relative prices where we are to right now today. So this $6.70 is the futures market for March, which is our nearby futures price, the price that the elevator uses for delivery today. This snapshot was taken at about 8 o'clock this morning. So this is relatively current information. So if we look back historically at where we're sitting today with corn futures market prices relative to history, we see that we had this 2011, 2012, 2013 timeframe where we had very high prices, a lot of price volatility. We saw a spike last year during spring planting. We saw a spike this last year during spring planting. We've come off those highs now, coming in at post-harvest, which is typical, which is normal, but we're nowhere near the level of prices that we saw back here in the 2015 to 2020 timeframe, where we had much higher inventory levels. So the question everybody has, of course, is moving forward, what do you think is going to happen? This is the chart for old crop corn. So this would be, again, for March futures, the price that the elevator's using to purchase corn today. I just want to show you some of the price volatility, the movements we'd have over the last several weeks. So we go back into the first part of December. We had a little bit of a rally coming into the end of the year. We got some information as we came out of the year. Again, part of this was because of the USDA spike or recovery. We had slower export levels, which caused some problems. We had the information in the USDA report, and this is kind of what's happened since then on a daily basis. So we do seem to have kind of a trading range going on between about this 650 level and about that 685 level. We're kind of in the middle of that range right now. We did get an announcement of additional corn sales this morning, so we did pick up some additional export sales, but however, we're still well behind the pace. My opinion, my viewpoint moving forward for the next several months, we will likely see this trading range continue. I don't know that we'll get below this 635 level, but again, there are some things that might occur both geopolitically that might cause that to happen. But if we look purely at supply-demand conditions, in my opinion, we'll have a pretty narrow, tight trading range until we get closer to spring's work and we start negotiating or trying to figure out what are we going to have for plantings in 2023. So I don't know that there's a lot of downside risk, although there are a few things that I'm watching. Although on the flip side, I don't know that we're going to see a lot of price rallies as we go forward either, simply because we have had that relatively slow export pace. As we look into 2023, so this is the December 23 futures. So this would be the futures market price that the elevators are using to price new crop corn. Now, this is telling a slightly different story. If you look at kind of the price movements, they look very similar, but we're at very different price levels. So this morning, as of about 8 o'clock, we were at 586 on the futures, which again is still a very, very strong price for corn. You take about a 60 to 80 cent basis off of that, you're still looking at between 5 and 550 corn that you could contract today for harvest delivery. So I am encouraging people to start looking at pricing some 2023 corn. I wouldn't get terribly aggressive. I do think there's going to be a little bit of a bidding war this spring where you have to find the right balance between corn, soybeans, and wheat. And there's also, again, some political things that we're watching that might cause a price rally as well as a price decrease. So I wouldn't get terribly aggressive for 2023 corn yet, but I would be pricing something if we get a nice rally going on. So again, I'm watching this closely. I am a little bit concerned that unless we get some new news, something that will spark or lift the market, that will start drifting lower into this 575 level layer. And I do think that 575 layer will hold, but again, we'll have to wait and see. I'm cautiously optimistic that that will hold at least for a while yet. We are talking quite a bit about what's happening in South America. I just want to tell everybody that South America, in particular for Brazil, has two crops of corn, two corn seasons. The corn season we're currently in is on the left-hand side. So notice where the corn is produced in this, what's called the first crop corn. The second crop corn is what's called the safrinha crop. It's actually the larger volume. About 75% of the bushels are produced in the second crop, about 25% in this first crop. The thing with the first crop corn is most of that corn, as you notice, is growing very close to the major export terminals. So it's very easy to get this first crop corn from the field into an export terminal and onto a vessel. So even though there's some second crop corn that can also hit this export market, a lot of the corn that is exported into the global market that competes directly with the US is this first crop corn. Argentina is also a major corn producer. This is the corn producing region for Argentina, much smaller, much more compact. Let's look at soil moisture conditions. There's been a lot of concern about what's going on in Argentina for both corn and soybeans. This is basically the third consecutive year where they've had major drought in Argentina. The corn is actually, some of the corn in Argentina is still being planted. Because of the dry weather, they've been delaying planting, waiting for some rains. There was some rains late last weekend and late last week and over the weekend. I do think some of the corn and soybean planting progress will start to pick up again because of those rains, but the rains were not enough to really relieve all of the drought stress that's going on. We do have a pocket in central Brazil that's starting to show up as concern. But right now, as we look at the corn crop, it's still in pretty good shape. Most of the private analysts, as well as USDA, have been leaving their estimates for total corn production at pretty much stable versus what we saw in the December report. So no major concerns for the Brazilian corn crop showing up yet, but we do have some major concerns for the Argentine corn crop. A couple more comments, because I do have a few minutes left. You may have heard about this dispute, kind of an emerging grain dispute, specifically for corn between the United States and Mexico. Not long after Mexico's president Obrador was elected in 2020, made the announcement that we're going to try and promote a ban of GM corn from both production in Mexico as well as imported corn. So we've had some discussions, a lot of kind of political debate going on about what's going on. We're getting some mixed messages from the Mexican administration. The president is still pushing for these bans, but the agriculture ministry is looking for some kind of a compromise. Now, there was recently an announcement that the ban was going to be delayed from 2024 to 2025 to give a little bit more time to figure out what exactly is happening. As of yesterday, there was actually a pretty significant meeting between the United States, both U.S. Secretary of Agriculture, as well as the chief trade negotiator, the U.S. Trade Representative's office, and their counterparts in Mexico. There's a meeting yesterday. There was no resolution found. Right now, at least again, the Mexican government is trying to hold with this 2025 implementation. We do have some provisions in USMCA, which is the old NAFTA agreement, that agreement between the United States, Mexico, and Canada on trade flows, not only agricultural trade flows, but also other products that do specifically lay out kind of the rules for GM, genetically modified crops, as well as phytosanitary regulations. And so there are some rules in place that are actually in US's favor that would hopefully encourage the Mexican government to continue to have the free flow of grain between the United States and Mexico. Again, this is really specifically a corn issue. We're gonna have to watch that pretty closely. One other thing that I want to point out with trade between China and Brazil, recently, in May, China changed their phytosanitary certificates that made it basically easier for China and Chinese companies to be able to import Brazilian corn. Now, As of November, Brazil did authorize or approve 136 corn export facilities to be able to ship corn from Brazil into China at lower restrictions. So it wasn't necessarily a pricing thing, but there were some phytosanitary restrictions that were allowed. So we do think one of the reasons that China is slow to buy U.S. corn is because they are waiting for that Brazilian crop to come in. I do have one more comment, but I'm going to pause there. We'll open it up for questions because I'm out of time.